each other. I did this mostly for real estate agents, and the reason why is because my approach is going to be different, I would say, than typical. I normally am very, I don't know, professional or whatever you want to call it, or very customer service or whatever you want to call it, right? But I want to see if I can do this more. I hate the word authentic because everyone uses it, but it's real, right? I want to be more real. I want to be more myself, right? So that's what I'm going to test out. And you guys are kind of my audience. And I'm doing this because I want to see if I can get away with being more myself. And you guys will still be willing to possibly share this to other people. And I'm not saying you directly have to share it to your clients, but I'm saying you can give me your opinion, your feedback, right? And hopefully you learn in the process. I am going to just make sure that my sound works on my streams, and then we will move on. Let me see here. So make sure it works. How do I get off this Bluetooth? Check, check, 1, 2. How do I get off this Bluetooth? Okay, perfect. Alrighty, so I have everyone on allowed to talk. So if you want to unmute yourself and ask a question, you can anytime. Megan wants to be a panelist. I will make you a panelist, Megan, no problem. If you want to become a panelist, just let me know. Okay. I don't know. Maybe it makes it better. I don't know. And I want to make sure my mic is in front of me so you guys can see. All right, cool. So welcome to the first time homebuyer seminar. I call it the honest first time homebuyer webinar, really, because the goal is to literally just be honest with everything that the home buying process is, which I think a lot of loan officers are really bad at, right? So the purpose is to share the information that would be obviously relevant and useful, but at the same time do it in a way that that is more relatable, I guess I would say. So I'm going to share my screen. I'm hoping that you guys will be able to see it. Where is it? Do you guys see my presentation? Okay, cool, awesome. So, okay, well, let me know if you have issues or whatever. I really appreciate you guys being patient as we do this. Okay, cool. So yes, the LL team, literally Van Mortgage. And I'm going to go ahead and take this away here. So introduction, I am a certified veteran mortgage advisor, branch manager at the Larry team at Van Mortgage. I like how I put the Z right there. That's a really great typo. Licensed loan officer since 2016, 6 years. That's unbelievable to me because it felt like it was just yesterday that I got licensed. I also have a side hustle as a social media marketing coach and running my own ad agency, Robots LLC, which a lot of you guys might know me from there. I'm licensed in 11 states: Arizona, California, Florida, Illinois, Indiana, Louisiana, Michigan, New Hampshire, North Carolina, Tennessee, and Texas. California is pending right now, so maybe I should have said that, but we'll pretend that that I didn't know that when I did this video, okay? All right, so I'm gonna read this real quickly because the reason why I do this, my mission is I love the mortgage business, but I was fed up with the lack of education information clients were provided during the application process. So I created a first-time homebuyer coaching class that provides instant access to answers to questions and simple explanations to the mortgage process and how to qualify for mortgage clients, as well as one-on-one coaching. Unlike other loan officers, I made it my passion to coach first-time homebuyers on the mortgage process, and that makes all the difference in how I've helped hundreds of people get on the right path to home ownership. And many of them are now homeowners. You remind me of many of my smart, successful, and savvy clients who are now homeowners because you are you're taking the right step to the home purchasing process like they did, meaning you're trying to get education. The home buying process is very confusing to most people. It is confusing to me as well. And that is why I'm here, to simplify and make sure you are 100% prepared in the home buying process before anyone else. And I also like to add, if I could, to avoid embarrassment, because a lot of people apply and they're not ready, and it's almost like they ghost me. And I'm pretty sure they ghost other loan officers when, there's a little bit of work that needs to be done and they feel like they were not prepared when they should have been. So I'm trying to help avoid that. All right, my why, real quickly, my family, of course, my wife and my kids. I call them the Lee boys. specifically Hunter, who's on the left here with the crazy looking face, and then Bruce, where I'm pictured with him. They're both on the spectrum for autism. So my why is to not only provide for them, but also provide for the therapy. So I'm working on getting that done this year. I also want to donate to any autism related type organizations. I think Autism Speaks is one of them. I don't know. I'm not sure yet, but I want to donate to that. My next why is veterans. I'm a certified veteran mortgage advisor, and I'm going to explain to you in the next slide why. This is a post I made on social media that was, I don't know, it was one of my more serious posts. I put that my father was living in Da Nang, Vietnam during the fall of Saigon. My mother would live in Saigon. My father left it by helicopter, my mother by boat. It was U.S. soldiers who helped them get into the helicopter and on the boat, and those were, of course, military ships. They met in Hong Kong, China. If it wasn't for U.S. soldiers, my parents may not have survived, met, and had me, and I wouldn't have what I have today. I might not even exist. So those U.S. soldiers are more than likely veterans now. So thank you, vets. I owe you my life. So basically, what I'm saying is that if it wasn't for veterans, I probably would not exist right now. Like I probably wouldn't even be here. So I owe them my life. Okay. All right. So that's why I'm really big on the VA loan and helping veterans. All right. So this is what I'm going to cover. I'm going to make it real quick because I don't like long presentations. Honest answers to top 10 home buying questions. And what I mean by that is questions that people ask me either when they first talk to me or they're just asking in general or friends are asking me whatever. I'm going to give you my honest answers to those. The next one is questions loan officers should ask before taking an actual 1003 or mortgage application, meaning the questions that I would ask a person before I actually have them fill out an application. And then the last thing is we top 5 things not to do when buying a home. And I put, it's not what you think. What I mean by that is you probably hear the general rule of thumb when it comes to top 10, but I have my version of the 5 things you shouldn't do. And it probably should be longer, but I just want to kind of hit the ones that I think are most important. All right. So disclaimer, I'm not trying to piss anyone off or make anyone feel stupid. I am simply trying to provide transparency because most loan officers are not or are doing a horrible job of telling you the truth. Also, any information I share is general knowledge I acquired through training and experience. Everything I put, it should be every situation. It's subject to case-by-case basis, and exceptions are always possible, especially with different lenders and financial institutions and states. What I mean by that is what I say might not be true across the board. Maybe someone disagrees with what I say. That's okay. Sometimes my information is not 100%. Again, it's through experience and conversations and training. And there's a lot of people out there who might know more than I do, right? And also, guidelines change all the time. Okay, I think in 2021, like three huge things changed, so it makes a difference. But basically, I started a class called Homebuyer Secret, and the whole point was to share the secrets. And what I mean by secrets, like there's information that for some reason loan officers don't share all the way, or they're not 100% transparent. 100% transparent. And I think it actually hurts the industry. It hurts the real estate agents and it hurts the clients. So my goal is to correct that. Okay. And, I know that by doing this, I might piss people off. I might upset people. I might make people not want to work with me. That's okay. If I upset you or I make you feel bad, whatever, but you leave here a little bit more smarter, or you have a higher IQ when it comes to mortgages, and you make it easier or better for the loan process in the future, especially for another loan officer, then I feel that's a win. So even if you don't work with me, if I help raise the general IQ of the population when it comes to mortgages, then I consider that a win. Okay. All right. So next slide. Real talk, my honest thoughts as a loan officer. This is a presentation I've done, and it's a video that I've done on YouTube. All right. So top 10 questions asked by home buyers. Number 1, what do I need to qualify? Number 2, do I really need to be pre-approved? Number 3, what is the first step of getting pre-approved? 4, who do I need to talk to first? Loan officer, and it should be real estate agent. Number 5, how do I know how much I can afford? Number 6, how much money do I need in order to buy a house? Number 7, what loan programs are available? Number 8, how do I get 0% down? Number 9, what is the interest rate? And number 10, how do I get the best interest rate? And have a bonus question. And I laughed at the number 9 because that's the question I get a lot. Like someone calls me, like they find me on Google or Yelp or whatever, like online, and that's the first question. What is your interest rate? And I'm like, that's like the stupidest question you could ask. But I don't say that to them, obviously. But that's what I'm thinking, right? And just so you know, if I do talk to a client or a referral that you send me, I'm not gonna I'm not going to treat them bad, right? I'm going to give them my all, and I'm going to make them feel good and all that good stuff. What I'm trying to do is I'm trying to uh, educate people who might not work with me or people who are just thinking about buying the house, and at least get them a chance to learn the hard way or the honest, blunt way what it takes to buy a house. But the people who are already talking to me, I'm going to, of course, give them great customer service if possible. Right? I'll never call them stupid or anything like that. But I might call stupid because you haven't even decided to hire me yet. Okay. All right. So number one, what do I need to qualify? Really, you need income, assets, and credit. And I think that should be common sense, right? Income, because we need to know that you can pay back the mortgage. Assets, because you got to pay for stuff, as in like down payment and such. And credit, because we need to know that you have a history of good payment. And I have a long list of things here. I can actually share the PDFs if you guys, or the guideline or the infographics later on, because I'm not going to get too deep on it, but I'm going to be pretty general. But basic income is like a job, self-employment, maybe you own a business, maybe you're getting some sort of retirement, alimony counts, child support, asset depletion. That's kind of an interesting thing. That's where like you have a huge nest egg of funds, and you could actually draw income from there, and that can actually qualify you. And there's other additional income. When it comes to assets, it has to be sourceable, meaning we have to be able to trace it. So cash is not good. So gift funds, that means someone's gifting you the money. We can't borrow money. Well, actually, there's certain cases where you can borrow money, but in reality, gift funds are people that are donating money to you. 401k, meaning like a retirement savings that you might have. A lot of people don't know that they can use a 401k to put down payments. In fact, they encourage it. And of course, money in the bank, right? Credit scores. Is really different who you talk to. You can go as low as a 500 credit score with 10% down using FHA. My bank or my lender can do that, but I don't celebrate that. I don't advertise that, But if someone comes with below 580 credit score, but they have more than 10% down, there's a chance we can help them. But it's really a case-by-case basis. But really, we started at 580 for FHA. And 620 for conventional. But again, with the 620, you're probably more likely going to be an FHA person, because you'll be a stronger FHA and be a really weak conventional. And you have to be really perfect on every other level to really qualify at a 620 with conventional. So that's why 640 is kind of like the rule of thumb for most banks. But again, I can, at least from my experience, I can help people at a 580 and even get you conventional 620. Okay. And, depending on what program you're going for, it all makes a difference. Okay, but so that's why I put best to check with your local lender. Okay, do I really need to be pre-approved? There is a time that maybe you can get away with it, not being pre-approved. But honestly, in this market, and I'm pretty sure most of you real estate agents would agree, you're not looking at an offer if the person's not pre-approved. If you're a listing agent, and if you are a buyer's agent, you're probably not going to be very excited about sending someone out to look at houses or showing houses if they're not pre-approved. Okay. So the answer should be yes. Do I really need to be pre-approved? Yes. And honestly, it's not just about making sure you qualify. It's about doing your homework and being prepared. Okay. And a lot of my conversations or my tips are going to be about being prepared, knowing what you're doing, and mentally and emotionally and physically being ready, and also not rushing. Okay. So being pre-approved, it just means that you did your homework. Okay. So what's a pre-approval? Well, we review your documents, we review your credit. We actually pull your actual future credit using FICO 4, 5, and 2, which is what lenders across the board use. So I don't want to get too deep into this, but basically Fannie and Freddie has a specific type of credit report that they're looking for, or information from bureaus. So that's why all lenders use the same scores. Okay. So just because I see a score that you might not like doesn't mean another lender is going to see a different score. No, we all see the same scores. Okay, so shopping lenders just because you don't like the score I gave you doesn't change anything. Okay, so we also check for income, W-2 pay stubs, 1099s, tax returns. We need a verification of employment in most cases in order to, of course, close a loan. But for pre-approval, we might not need it, but it depends. Let's say you have a lot of overtime, a lot of bonus. We don't want to qualify you incorrectly, so we ask for a VOE beforehand, and that's actually a little bit more work beforehand. I'll give you an example. Pre-qualification, you're not going to do a VOE. Pre-qualification is like we review it, it looks good. All right, you can go shop. A pre-approval, that's with verify with employment is like actually making sure that you qualify 100% based on your income, which is what I actually recommend, right? I actually try to encourage my clients to do what we call is a TBD or to be determined. We actually underwrite you 100% as far as we can uh, without the property, right? So it's almost like whenever when you get a contract, you're going to underwrite yourself and you underwrite the house. Well, we're going to do the underwriting on yourself first before you get a contract, because why not, right? And it's going to save time. You can close faster, and there's no surprise at the very last minute, unless of course you change it, right? Assets. Bank statements, savings, 401k, like I said earlier. And then we submit you through the underwriting system. It's called AUS. And I call it like a robot god that knows about the mortgage algorithms and what's going to qualify, what's going to not. It reviews like all your credit information and the information that we input, and it tells us what they think you can do. And if you have an AE or approved eligible, more than likely you'll be good all the way through. If you get other findings, doesn't mean you don't qualify. It means there might be exceptions that needs to be made, like a manual underwriter or something like that. Okay, but normally we want to get an automated underwriting system to get you pre-approved. Okay. What is the first step in getting pre-approved? Speak to a loan officer, right? You got to explore your current situation and your goals, and you got to fill out the 1003, the mortgage application. Okay, that's the first step. Well, the first step is wanting to do it, and the second step is talking to someone like myself. Okay, and we will lead you through the process. All right. Who do I need to talk to first? Loan officer or agent? I always say the loan officer, and I know a lot of you guys might not like that. Most agents might not like that, but I mean, let's be honest here. You can't do anything with anybody if you don't know if they qualify or not. You don't know what their buying power is. You don't know how much they can buy. You don't know, what price range you should be looking at. You don't know those things, right? So it makes sense to get pre-approved first. But I would always say there's an exception. If you have a real estate agent that you love, know, and trust, then it makes sense to ask them or talk to them first and ask them for a referral. Because if they are a real estate agent you love, know, and trust, and hopefully they are a good real estate agent, they probably have loan officers that they worked with in the past, and they can depend on them. And having a working relationship works. Makes things a lot easier. Okay, that would be the exception, but really, most real estate agents won't show houses to people who are not pre-approved, and they won't even know how to, show, like they don't know what houses to show you. Of course, I'm not a real estate agent, so I don't know the real estate agent side or real estate side, but I would assume that it would be pretty difficult to know what kind of houses to send someone if you don't know what their buying power is. So that's why I say you need to speak to a loan officer first. But a lot of times they speak to the agent first. Okay, and yeah, I mean, I call it people do it ass backwards, right? But that's okay, because either way, as long as they get pre-approved, doesn't matter who they talk to first, right? All right, next slide. How do I know how much I can afford? So I always tell people that you need to just talk to a loan officer. It's impossible to try to figure out the math on your own. Now, that's not true. If you are really good and you know all your information, like I have a CPA client who pretty much knows everything about his information. So he did a pretty good job of figuring out, his DTI, whatever. He even knew what his interest rate was when I gave him his payment. So it's like he's that good, right? So, but he's a CPA, right? But most people you won't be able to know, because we have to look at everything. We have to look at your income. We have to also look at your debts that are on your credit reports. There might be other debts that are not on your credit report. So there's a lot of information that I call it an algebraic equation. There's a lot of variables that you don't know about that we have to find, right? But I'll just give you some general math so you can understand. With conforming loans, that's like conventional. You're looking at about 30%, 35%. You can in terms of the max, but you can also go up to 43%. I've actually seen 50%. When I say compensating factors, things that are in your favor. Maybe you have a strong rental history. Of paying maybe more than what your mortgage. So let's say your mortgage is $1,000 and your rental history is $2,000. Well, that actually is a pretty good compensating factor. You paid $2,000 a month for 2 years. Maybe you can afford 50% DTI, right? So it really depends. FHA, it actually goes a little bit higher. That's why a lot of people like to go FHA, because you can actually get a little bit more buying power. It's about 30% is the general guideline, but you can go up to as high as 55%. And it's funny because most FHA loans always end up being in the 50+% range, and conforming or conventional ends up being below 50%. It's almost like there's like a buying range that people want to be at, and some people they're trying to buy too much, and some people they're just buying whatever fits them, right? So VA loans. That's another thing, is a little bit different. As you can see, the numbers are they're all across the board, like kind of bouncing around. But you can go up to 50% on VA as well. USDA is really strict. Okay, USDA is a rural loan. They're trying to get you to buy a house in the middle of nowhere, and they're encouraging you to do that by offering you 0% down. So the way they look at it, if you're not putting anything down, you might need a little bit of help. So we're going to help you, but we're not going to let you like overspend, right? So the DTI is a little bit stricter for USDA. Okay. And of course, there's exceptions, in terms of what kind of loan products you're looking at, non-QM as a non-qualified mortgage, and also down payment assistance. Okay. But this is how you want to do the math. If you want to do the math, this is how you do it. Okay. You literally look at how much you're paying every single month in terms of reoccurring debt. And when I say reoccurring debt, I'm talking about things like your car notes and your credit cards, and maybe you bought furniture online. I'm not talking about your cell phone bill. Your cell phone bill is not a debt. You can actually stop using the cell phone and be okay. Well, actually, I guess you might finance the cell phone. I don't know. But I'm talking about like things that are going to be on your credit report that you must pay back. Electricity doesn't really count. You can actually officially stop using electricity, and that'll be okay, right? And then you divide that by your gross monthly income. When I say gross, I'm talking about before taxes. Okay, and if that's your debt to income ratio, but you also have to add the home as well, right? Like your mortgage payments. Okay, so let's say you make $1,000 a month and you want $1,000 mortgage, you're not going to be able to afford that. You won't qualify for that. Let's say you make $1,000 a month and you have $1,000 in recurring debt. There's no room to add a mortgage. So that should be pretty simple math, right? But, of course, if you want to know your true buying power, you really need to talk to the loan officer. But this is how you can kind of figure out the math yourself, okay? All right. How do I know how much I can afford? Again, I kind of went over this. You have to look at your monthly payments, which is including the DTI, which is a long list of things: mortgage payments, property taxes, homeowner insurance, like I said, car payments, maybe personal loans, maybe you owe child support, maybe you're paying alimony, government debt, like you owe money to the IRS. Right? Those things are going to be added to your DTI. Stuff that's not included is going to be like your car insurance, your cell phone bills, your health insurance costs, groceries and food, entertainment, right? So those are not included in your DTI. Okay. Number 6, how much money do I need in order to buy a house? Okay, so this one's a little bit deeper, but I'm going to try to be general about it. Okay. Most of you guys on the call probably know these numbers, but a lot of, I guess civilians, I would call them, they don't know that you can actually buy a house with as low as 3% down, which is a conventional. It's called the Home Ready Home Possible. I call it a secret loan because a lot of people don't know about it, but you can go down 3%. It depends on your income and where you're buying. Okay. Of course, you have to qualify for it as well. But, a lot of people go 3.5% with FHA because it's lower down payment than conventional. And FHA is a little bit more flexible in terms of qualifications and DTI. Okay. You can go 5% with conventional, of course. If you want to avoid mortgage insurance, you got to put 20% down, meaning you have to have 80% loan to value or 20% equity. Okay. And there's other ways to avoid mortgage insurance, but that's just kind of the general mindset when it comes to down payment. And of course, 0% down for VA and USDA. VA as in VA loans and USDA as in the rural loan I talked about. Closing costs, this is a really, really like broad stroking number, $2,000 to $4,000, because there's different types of fees. There's prepaid interest, there's underwriting fee, processing fee, mortgage insurance. You got to lock the rate, maybe you're buying a discount, there's things like that. And there's way too much information to share on this call. But there's lots of fees to consider. And you also have to consider third-party fees like title search, the appraisal fee, attorney fee that's in Texas, credit report fee, wire transfer fee, if you're going with a VA loan, there's a funding fee. There's a guarantee fee for the USDA. I mean, there's upfront mortgage insurance premium for FHA. Again, there's way too much information, but there's a lot of costs that you might not think about whenever you are purchasing a home. And then there's also prepaids, meaning you have to have money in your escrow account for insurance and prepaid interest and property taxes, right? And these things are expected to be provided at closing. Okay, so not only do you have to have down payment, but you also have to pay for closing costs. But you also have to have prepaids, right? So there's more to it than just the 3.5% down in FHA, right? Which a lot of people don't understand, right? So I say the general rule of thumb is 10%. Okay, 3.5% for the down payment, 2.2 to 5% for closing costs, and sometimes you need reserves. Reserves is the best way to describe it is just money in the bank. That's a cushion. Okay. So let's say someone qualifies, but they must have a year in reserves. What that means is that they must have 12 months of mortgage payments in the bank after closing. Okay. So maybe they qualify, but they need a little help to make sure that they can close and be okay. Because the worst thing we can do is, make you so broke that you're eating ramen for the next 6 months. Okay. So what loan programs are available? When I say when I say typical normal QM loans, I'm talking about qualified mortgage. These are the loans that you probably know about: conventional, FHA, USDA, and VA. The non-QM loans or non-qualified mortgage are the ones that do not conform to Fannie and Freddie guidelines: jumbo loans, bank statement loans, investor cash flow loans, 1099 loans, construction loans, and I-10 loans. I don't want to get too deep into these, but an investor cash flow loan is an interesting one. You can buy a house and not have any income. Why? Because you are showing that the home that you're purchasing, which is of course an investment property, makes enough income as a rental to cover the mortgage, right? So that's a non-QM loan. You cannot do that with a qualified mortgage, and a person trying to move into the house cannot use that because, of course, obviously someone's got to pay for the mortgage, which is the people that are renting, right? So again, best to check with your local lender, but there's a lot of different loan programs available. All right, how do I get 0% down? So when someone asks me this question, of course, more than likely they're not thinking about the VA loan, and they might not know about the USDA loan. So it tells me that they don't have money, right? Which of course kind of sort of I wouldn't say it raises a red flag, but that's when I already know that they're not ready. Okay, but I still break down the information because obviously they're coming to me for information. I'll tell them that, well, if you are a veteran, you can do a VA loan, and they might say, well, I'm not a VA veteran. I'm like, okay, well then you have USDA, which will allow you to purchase a property in a rural area, but there's income limits and such. And a lot of people don't want to buy USDA; they want to buy in the city that they're at, right? I go, okay, well, there's down payment assistance programs, okay, and down payment assistance programs, they're very unique and more complicated. They will take more time to close, and there's a lot of different types. And I don't want to get too deep into them, but they are available, and there's always some sort of catch to it, right? Maybe a higher rate. Maybe you can't refinance after 5 years. I mean, there's lots of different ways that people will finance your down payment, but then they have something. Let's put it this way: you're going to pay for it somehow, right? And again, there's too much information to share on this call. But if you want to know about my situation, I do have down payment assistance programs, and I can go nationally with it. So just reach out to me if you have questions about that. Okay. What is the interest rate? Okay, so this is the one that kind of makes me laugh. If someone, like I said, someone calls me and asks me, I want to buy a house, and someone recommended you to me, or I found you online, whatever. So I want to apply for a mortgage, but what's the interest rate? And to me, it's like, okay, well, I can't really answer that question correctly. I can't answer it honestly, okay? Because it really depends. It depends on what's going on with you. It depends on how much you're putting down, what your credit scores are, what your income is, what your DTI is going to be. I have no idea. So literally at this point, it's all about selling. I'm going to try to sell you to work with me by giving you the lowest interest rate possible with everything being perfect, right? And the bad part about this is that that's what all loan officers are doing. So they're being fed a lot of bullshit, basically, right? People are being fed a lot of bullshit. Oh, I saw online at bankrate.com and this and this. It's all advertisement. It's all lies. Okay. And I put right here, most likely scenario, the quote is inaccurate. Sometimes purposely quoted lower with fine print. Rate changes daily. And when I say rate changes daily, it means what I tell you today is going to be different tomorrow. So why am I telling you today? You don't even have an application. I say for marketing purposes, only best rates are advertised. I compare it to a moving train. It's never the same, right? Yes, Michael Hyman says the number to get your phone to ring. Yes, absolutely. Misquotes are not liable since they can blame market. So what I mean by misquotes is, and I've actually heard people being trained this. Like they would literally be told, if someone asks you what's the best rate, give them the best rate possible. Meaning like with 800 credit scores, with like 0% DTI, with 50% down, whatever. Give them the best, and then that way when they apply, and the real rate comes out, you can be like, oh well, the rates were yesterday's rate, the rates changed today, and because the market changes every single day, you actually have that to sort of fall back on and not be held liable of it, and I've actually heard people who would actually quote incorrectly on purpose because they know they're not going to be liable for it. So you're basically asking someone to lie to you, right? I mean, what's the best interest rate? Well, let me give you like the biggest lie possible, because I know if I give you something too high, you're not going to call me back, right? So obviously it's a very loaded question, right? But I can quote you. I tell people I can quote you if you tell me what you think your credit score is, how much you're trying to purchase, how much you're putting down, what your zip code is, whatever. But again, it's not reliable because people are trying to give the best case, okay? And how do you get an accurate rate quote? Well, an accurate rate quote? Well, you got to apply, right? Apply, let me see your application and everything. The only thing that will be missing is your property, which doesn't really affect your rate. I mean, I guess the zip code could. And then I can give you an accurate rate quote. Now, if you want the actual rate, then we must get a contract. We must get a property, and then we can actually, tell you what the actual rate would be at that moment. And then if you want to lock it, you can. Okay. And I go, this is the only way to get to. Okay. When I put this is the only way to get the actual answer, right? The question, what is the interest rate? The only way to get that is to have a contract and be ready to lock, right? That's the only way you're going to know. Because again, when I tell you today, it's going to be different tomorrow. I mean, I have a client who's doing a refinance. I've quoted him 10 days in a row, and it's been different every freaking day. Right? And I'm like, what's the point of me telling you? I mean, just if you like the rate, lock it. If you don't like it, then there's no point. But now rates have gone up, so he's upset, and I'm like, well, I mean, I told you, if you like it, you lock it. I'm not gonna. I don't have a crystal ball. I can't tell you if the rates will go up and go down. I can only tell you what the rates are at this moment. That's all I can tell you. And so yeah, I mean, the point of me telling you that is that the rates are always different every single day, right? And if you like it, you lock it. If you don't like it, then I guess you can wait and see what happens, right? But from my perspective, gambling is a dangerous thing. Okay. All right. So I don't want to harp on that too much, but it's a question that people ask that makes me laugh. Okay. So how do I get the best interest rate? Okay. So you must be willing to do work. Okay. You can't talk to one person and get the best rate. It's just like, and I in my video on YouTube, I compare it to buying a car because I usually sell cars. Okay. If someone comes to the dealership and says, I want the best price for this car, I don't know what that means. Right. So I'm going to guess. Right? I'm like, okay, I'm going to give you this much. And that might not be the best price. I might be able to go lower. I might be able to go higher. I don't know. But if you give me a quote, like you go, I went to this dealership and this is a handwritten quote for this exact car. It's the same car you have. The only difference is that it's in your lot and not his lot. Then I have something to work with, right? So basically, my strategy to help people, and sometimes not even, I help people actually go to other lenders. Like I actually will actually tell people how to do this, and they'll actually end up going with someone else, and that's okay because at least they got the best situation possible with my help. Okay, so my advice is to have at least two lenders, one of them that you love, maybe it's your local lender, maybe it's your best friend, whatever, and then one of them is the next best choice. And go to the next best choice and actually go get pre-approved with them and give them the contract. Okay, so that's how far you have to go to get the best rate. You have to actually get a contract, right? And then you send it to that lender, and the lender has to disclose based on the information you provided. And you can actually ask them to look at the rates and lock the rate. And that rate is now not changeable. So they can't go back on their word. So whenever someone asks you what's the best interest rate, I give you your rate. I can change that anytime I want, right? But if it's locked, it's locked. It's permanent. There's no changing that. So it is what it is at that point. So you go to your second favorite lender, you get them to lock a loan estimate for you, and then you go to your favorite lender, who you should already have a contract with as well, and you go, this is the rate I got from this guy. Can you beat this? Okay. Or can you at least match it, right? If the guy says, I can't beat it, I can match it, well, that gives you a chance to make a decision. But honestly, you're going to make the decision, go with your favorite lender, because there's a reason why they're your favorite lender. But that's the best way to get the best rate. Now, the reason why I'm saying this is because a lot of lenders can't help you unless they have a locked loan estimate, because they have to go above their pay grade. Like I have to go to my regional manager or my secondary department or whoever does pricing to see if there's any way I can get some wiggle room or whatever. And they won't do it without a locked loan estimate. And I'll tell you the reason why. Okay. And I'm telling you this, a lot of lenders might not tell you this. So I'm telling you this to be upfront with you. Okay. A lot of lenders might have wiggle room, but they ain't going to do shit unless they have a competitive pricing, right? Like just because you ask for a discount, I'm not going to just give it to you, right? I need to know what you want, right? What do I need to do to win your business now, right? And if you're telling me, if you beat this lock loan estimate, I will beat it, then they will do the work to find out what they can do, okay? Otherwise, there's no point. And I'll tell you why. Because why would they give you their best just so you can go and go someplace else? Okay. So again, what you're doing is you're kind of screwing the second lender, your second favorite lender. You're screwing them over, right? You're giving them a chance though. So he can't complain. So let's say it's Larry and Barry, right? And Larry's your favorite and Barry's not your second favorite, right? You go to Barry and get a lot of loans from Barry, acting like, and you will go with him if he's the better price lender. You go to Barry, you ask for a lot of loans, and Barry gives you a lot of loans, but you bring it to Larry, and Larry's like, I can beat this. Well, then obviously you're going to go with Larry, right? But that's what you want originally anyway, because Larry's your favorite lender, okay? And although you kind of screwed Barry over, you need to know that you can get the best rate, because obviously you want to go with Larry, but you're not going to go with Larry if he's more expensive. So it's doing your due diligence, and it's okay to do this because we're in the game of winning business. So we understand if we lose because of rate. Okay, well, I mean, some people might not understand. I understand. Okay, and that's okay because I want what's best for you and your family. And if the rate is the most important thing for you, and if I don't have the best rate, I don't blame you for not using me, but I'm glad that I help you get the best rate. Okay, a lot of lenders might not think that way, but I actually do. I am glad because I know that by doing that, I can possibly win your trust, and I might be able to get a chance the second time around, right? So that's kind of the point of me doing this, is to build relationships. Okay, so you are screwing Barry over, but in reality, you're just doing what's best for your family, and there's no way to get the best rate without a comparison. Okay, and again, my people, just like every other lender, won't give you the best unless they have something to fight against. And we'll be honest with you, we can't beat it. Like I've actually had people say, wow, that's a really great rate. We can't beat it. We can't match it. So there's nothing we can do with it. If they don't want to work with you based on that, then it is what it is. And I've actually had to tell people, hey, you know what? You have the best rate. So if you want, you can go with them. I've actually had people still stick with me because of my honesty, or they like me, or I was cooler, or whatever, better looking. I don't know why, but I've actually had people go with me because even though I was a higher rate. But for the most part, if I give them the numbers and they leave, I don't get upset with it because I couldn't beat it, right? So that's really the best way to get the best interest rate. Now, there's even more strategy behind it, but it's way too much to get into this, and I kind of save that for like my secret favorite coaching clients. So if you want more information on that, just let me know, okay? But I will put on here, especially once rate is locked, you can't change, it only expires. It is why you lock a second favorite lender first. It's okay to tell a second favorite lender you're shopping, right? I think it's okay to tell them that, okay? Like people tell me all the time, say, yeah, I'm actually shopping, so can you give me the best rate? I'm and they're making me lock, then I'm their second favorite lender. I already know that, right? Like, yeah, I'm shopping you, Larry, and I want to work with you, but I need a loan estimate from you in order to see if I can beat it. And if they're doing that, then I already know that I'm their second favorite lender. Okay, and that's okay because I have a chance. To me, that's worth more than nothing, right? All right, so The next question, and I call this a bonus question because not everyone asked this, but when they ask this, I'm like, okay, you don't have common sense. Okay. The question is, do you need a hard inquiry to qualify me? Yes. Yes. How am I supposed to know what you qualify for without having your information? That's like you ask me to do a math problem, but not giving me the variables, right? Like you give me a word problem, but you deleted some of the words. It doesn't. There's no way I can do anything. Okay. It is impossible to know what your credit without inquiry. Okay. And people tell me, oh, well, I got my credit scores. I got my credit scores from Trin Union. I got my credit scores from Credit Karma, whatever. It doesn't matter. They're not the ones qualifying you for a mortgage. Okay, I'm the one qualifying for the mortgage, so my credit report is what counts. Okay, and I said this in my video, and I'm gonna say it right now. It's like a drug test. Okay, why would I allow you to bring a drug test that you took from someone else and a pee sample from outside to my drug test? I don't know that's your piss. Okay, you need to piss in my cup, right, for me to be able to find out whether or not you don't have any drugs in your system. Okay, same concept. Okay, I don't know whatever credit report you have. I don't know if you forged it or you changed it, or you have a friend that gave you some fake information. I need to look at the credit report from my perspective. Number one, because I need to know it's legit, and number two, I can't do anything. I can't send you to the automated underwriting system without having a credit report in my system. I can't transfer your credit. I can't import your credit report into my system. It doesn't work that way. Okay. So even if you did apply with another lender, I can't take that lender's credit report and put it into my system. It's just not how it works. Okay. So the issue with this question is that people are worried about inquiries. Okay, number one, if you're worried about inquiry, your credit probably sucks anyways. You probably shouldn't be applying for a mortgage if you're really that worried, right? Now, I do have had exceptions where people have perfect credit and they don't want to inquiry, but they're just not informed that number one, inquiry is necessary, and number two, the most that you're gonna lose is 5 points. If you're worried about losing 5 points, you don't qualify for a mortgage, right? If you're worried that inquiry is going to disqualify you, you don't qualify. Okay, so let's get that out of your mindset. If you're thinking, I don't want to increase because I don't want you to hurt my credit, it's not going to hurt your credit. If it hurts your credit, you don't qualify for a mortgage at all. Okay, so let's just be real here. Okay, but there's information on the credit report that we need that's beyond the score. So your score is not enough information. Okay, I need to know what your liabilities are. I need to know what you have disputed. I need to know what your collections are. Things like that, right? And on the end, I put the CFPB or Consumer Financial Protection Bureau. They actually protect you. So if you have your credit pulled by a lender within 45 days, another lender can look at it and it will still count in the same inquiry. It doesn't affect your scores. Okay, so you actually have someone pull your credit 45 times. And I'm talking about, let's say 45 days, you have a new lender pull it 40, a new lender every single day pull it. So that's 45 times. It will still count as one inquiry. Okay. They did that to allow you to shop. The reason why credit pulls are bad is because they don't want you to take out too many credit cards or buy, too many cars or whatever. They know, well, actually cars might be a bad example. They know you're not going to buy 5 houses. Well, actually you might, who knows? But more than likely you're not buying 5 houses. So they know that you're having your credit pulled by 5 different lenders because you're shopping for the best situation. You're not trying to buy 5 different houses. But if you apply for 5 different credit cards, you try to get 5 different credit cards, and they don't like that. Okay, so there's a reason why scores go down, and there's a reason why scores are protected. And in this case, scores are protected because they are encouraging you to have your credit looked at. Okay. And I am at the end of this presentation. I'm going to just check real quick to see who is in the participants to allow them to talk if they aren't allowed to talk yet. Okay. Any questions thus far? I kind of went faster a little bit.
I was going to say, you just input your questions on a little content.
You can ask me any questions, but I was actually asking questions in general on what I just presented, the top 10 questions, whatever. No questions? Yeah, and I'm going to kind of give an overarching general advice, the three things that you need to really worry about, when people ask questions or what people are worried about is, number one, what they can qualify for. That's really what they're thinking. Can I qualify for down payment assistance? Do I need, how much money do I need? What am my credit score going to be? And to answer that question, you just need to apply, right? What do I qualify for? What local? You just got to apply. Okay, so let's stop asking the stupid questions and just apply, and then you'll know. Clarity will, or the truth will set you free. Okay, so you need to apply, but you need to apply, of course, with a lender that cares enough to give you feedback, right? Because there are a lot of lenders that you're going to apply with, and you don't qualify, and they ghost you. They don't even answer your question. They send you a letter saying that you're denied, whatever. So obviously that's bad, right? You want to talk to a lender that's willing to at least break down what's going on with your situation, and at the same time guide you to the next step. For example, this is what I do, right? If I pull someone's credit and their credit sucks, okay, I'm going to find out a way to get it to unsuck, right? I'm going to find out what they can do. We call it Wayfinder, where we actually go into the credit reporting system and we actually figure out what they can pay down and what they can do differently to increase their scores. And if their scores can be increased enough to qualify, then I'm going to, of course, let them know that. And then I'm going to tell them, I'm going to give them like it's called a credit plan, where we actually tell them what they need to do. And if they do it, we can actually do a rapid rescore, which actually will unnaturally update the scores with the credit bureaus, and therefore we can get their scores up within a couple of weeks, maybe less, right? It all costs money, but I pay for that. Like, we don't charge the client for that, okay? But that's something I do, right? So to me, the advice is you need to apply, but you need to apply with someone who cares enough to give you information or feedback, what you need to do. That way you know where you stand, okay? It's true, you might apply and get nothing. Okay, sorry, but you just talked to the wrong loan officer, okay? But in order to, answer, I'm going to go to the 10 question real quick, okay? In order to answer the majority of these questions, you just need to apply, right? What I need to qualify, do I need to you need to be pre-approved. Now, I'll address that next. But basically, a lot of this is covered by applying. Okay, number one. Number two, the whole inquiry thing, the whole starting the process, the whole getting pre-approved thing. In this market, you're not going to get anywhere if you're not pre-approved, period. Okay, so you just need to bite the bullet and get it done, right? You need to bite the bullet and get the letter that you need in order to make offers. Okay, and how do you do that? You talk to a loan officer. Okay, and no one has time for you to try to figure out what you want to buy if you're not pre-approved, right? And the worst thing that can happen is you get a contract and you're not pre-approved, because now we're rushing, right? Number one. And number two, we don't even know if you qualify for the house that you made an offer on, right? I mean, that's the worst thing you could do. Okay, I compare it in my YouTube video. I compare it to buying shoes. You don't know what shoes to buy until you find out what size you need. Right, so you got to try on to find what size, and then you know what shoe to buy. I'm not going to look at a box and go, I want that shoe. I need to know if it fits or not, right? That's what a pre-approval is. Pre-approval is to see if it actually fits your situation. Okay, so it's just silly to go out and look at houses without being pre-approved. I mean, I don't know why you would do that, right? Except for the fact that you're skittish and you're worried about getting your credit pulled, whatever. And again, if you're worried about getting your credit pulled, you don't qualify for a mortgage, okay? If you're concerned that it's going to disqualify you, you're not ready. You're not ready to buy a house, okay? So hopefully this information gets you ready, okay? And the third thing that I want to address in general is the interest rate thing, right? I understand interest rates is important, but in reality, it's not the most important thing you should be looking at, right? You need to actually be looking at APR, right? Because I can give you the lowest interest rate, but I might be charging you a discount for that, right? Like Rocket Mortgage, I probably shouldn't have said Rocket Mortgage. When I replay this video, I'm going to say a company that is known for space projection, whatever, right? But that company has given quotes where they give a really low rate, but then there's a huge discount fee. Like, they're actually paying a huge amount of money to get that rate. Okay, so you can't just look at the rate; you have to look at the APR. How much is it actually costing you to get that rate? Okay, so that's why a loan estimate is so important, because a loan estimate is designed to give you full disclosure. A locked loan estimate has to give you full disclosure. A locked loan estimate is official. This is the official quote. It cannot be changed. right? So that is as real as it gets. There's no advertisement there. This is the actual contracted quote that they're asking you to sign, right? They actually, when it's a lock loan estimate. So that's how you know what your rate really is, and that's how much you know it costs. And I know mom and dad and grandpa and uncle and neighbor all bought houses, and they're giving me advice, and you need to get the best interest rate, blah 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 blah. They don't know what they're talking about. Okay, they don't sell houses as a profession. They don't do mortgages as a profession. Okay, they're only telling you what they think they know because their loan officer fed them that information. When the truth matter is, it's about APR, right? How much the actual loan costs you. So asking about interest rate is it's a loaded question that's going to lead you to nowhere, basically. Okay, but hopefully you talk to the loan officer that's honest and they give you some more information. Okay, so let's see here. I have a few questions here. If someone needs credit repair to improve their position, is this something you offer or you can refer them to? Tammy, so to answer that question, I don't do credit repair, but I will provide, like I said earlier, a credit plan. So let me explain that process to you. I pull the credit and it's now in the credit reporting system. The credit reporting system has a sort of a service or software or option to do a wayfinder, how to get your scores up, right? So they actually say, okay, you're right now at a 580. There's a possibility you can be at a 640, and this is how you do it. And they tell you what you need to do. Usually it's paying stuff down. So pay this $5,000 debt to like $2,000. Pay this card from like $600 to $10, right? It tells you that information, and it instructs you on what you need to do in order to get that score up, and then at the same time get that score updated so that the new credit report has the new scores. I provide that, right? And again, that costs us money and time, whatever, but that's something I provide anyways because I want to make sure that my clients get all the information they need in order to make a good decision, right? Especially if they're not quite ready yet, right? Because nothing happens for me until they buy a house. I'm pretty sure you're in the same boat. Nothing happens for you until they buy a house, right? So it is in my best interest for them to buy a house. It is my goal. It is my drive. It is my passion. It's literally what I wake up for, to help them buy a house. So if giving a credit plan is going to get them there, then I do it with pleasure. Okay. When it comes to a credit repair, that's not my wheelhouse. That's not what I do. But I do have people I can refer them to. Okay, but I focus more on the credit plan. If they need credit repair, they're beyond my help, and it's almost like, I mean, I can't do anything beyond that. So it's really subject to what they decide to do from that moment on. Okay, no problem. Of course, boss lady. Any other questions or anything before I move on to the next part of the presentation? That one took an hour. It shouldn't have taken an hour. It should have been faster, but it's okay. The other one's just going to be a little bit quicker. So yeah. And I actually have a lot more content I like to share during this, but I don't want to take up too much time. All right. So questions loan officers should ask before taking an actual 1003. So what I mean by that is questions that a loan officer like myself, actually, hold on, let me address this question. I think Michael has asked something. Let's say hurry up and wait in real estate. Do what you can ahead of time. You could avoid some of the details. Yes. Thanks, Michael. Yeah. In real estate, I found that people are slow to get things going until they get a contract, and now they're rushing you, right? That's the incorrect way of doing this process, because rushing leads to stress, it leads to mistakes, and it leads to a lot of unnecessary drama, right? So that's part of the reason why I do these classes, because I literally want you to show up to your loan officer. If it's me, that's cool. If it's someone else, I want you to show up to your loan officer with everything ready to go. Like I have clients that apply, and within a minute of applying, they upload all their documents. Those are the best clients, because I know that they're responsive, I know they're prepared, I know they're ready to go, and they're more than likely going to close on time or early. The people who ask me, why do you need my bank statements? Those are the people that are going to be troublesome. And I'm in this call or in this video, I'm trying to show you why you need the bank statements and everything else. Okay. So question loan officers should ask before taking an actual 1003. What I mean by that is what I should be asking you as a client before you even fill out an application. Because when you fill out an application, you're going to do a lot of inputting information that you're not going to want to input. It's going to take you a while, and it's also going to give me permission to pull your credit, which you might not want me to do if you don't answer these questions correctly. Okay. So first question is, I asked about your work history, and I asked you about how much income you make per month. Work history as in like, what are you doing right now? How long have you been doing it for? What have you been doing for the last 2 years in terms of income? And how much are you making, right? Um, so Tammy is asking real quick, if app submits all docs to you, how long does it take for pre-approval? I can probably turn one around within 24 hours. It depends on how complex the file is. So let's say they're self-employed, and maybe there's a few red flags. Maybe they have had a bankruptcy or whatever. Then that might be a little bit more complex. If they are regular W-2, it's pretty obvious how much they make. They have their bank statements, everything, and everything's in line. Within 24 hours should be okay. Right? Hopefully, that answers your question. Okay, so again, asked about work history and income per month. This should be obvious. It should be obvious, but a lot of people apply and they don't have this information either ready or they don't have it correct. Okay, but basically I'm asking for 2 years of work history, and I'm asking, are they W-2, like salary, are they hourly, or are they self-employed or commission? Okay, it makes a difference. And I ask this because number one, I want to know, but number two, I want to set expectations. If they go, oh well, yeah, I just started my job last week, and I'm commission based. I'm like, okay. And what did you do before that? Well, I worked hourly at the grocery store. Then I don't think I can qualify them because their history is not consistent. There's no history, right? And I'm not going to stop the conversation there. I'm going to keep asking questions, but I'm going to tell them I don't think I should pull your credit because I don't think you qualify based on your work history. But we can take a look at your documents to make sure. But from what you're telling me, I don't think you're going to qualify. Another thing is when someone goes, oh yeah, I've been W-2, for the last 20 years, but I just started my own business yesterday. You're not going to qualify because there's no 2 years of history there. Okay, the number one thing that people need to understand is that we need 2 years of work history. We're basically trying to find consistency. Okay, and consistency can only be found with 2 years. Like 1 year, there's no consistency. There's nothing to compare it to. Right? The example I use in other classes is you can make $1 million in year one and make $0 in year two. There's no consistency there, right? I don't know what you're going to make tomorrow, right? Because if you're at $1 million and you're at zero, from my perspective, you're going to make zero next year, right? So I need 2 years of consistent history. And when I say consistent, I'm not talking about just I need 2 years, but I need it to be consistent. So $50,000 and $50,000, that's consistent. I can depend on you making $50,000 the next year and the next year and for the next 30 years, right? Because we're making a 2-year bet off of, we're actually making a 30-year bet off of 2 years history, and it needs to be consistent. Okay, so I'm not saying that people shouldn't talk to me or shouldn't apply, but it does create a negative conversation when someone comes at me and says, yeah, I actually just started my new job and I haven't been doing the same job for the last 2 years. I've been self-employed, whatever. It creates frustration when I tell them why I can't qualify you. And they're like, why not? I make, $5,000 a month. I'm like, yeah, but you have 1 month of history. I need 2 years, 24 months of history. So if people understood that, then they would at least know when they should apply, right? Or at least start the conversation, okay? And when it comes to self-employed, I don't try to figure out how much they make there on the phone call. That's when I'm like, okay, you know what? I'm going to need your tax returns, especially if it sounds correct. Now, if they go, I'm self-employed for a year, then I might be like, I don't think that's going to work out because we need 2 years of consistent history. Now, there are exceptions. I actually might be able to qualify you for 1 years of tax returns, but you have to be in business for 5 years. What I mean by that is, let's say you don't have 2 years of tax returns, you have 1 year, but you've been in business for 5 years. Let's say you're a hairstylist, right? That's just an example that I see a lot. If you've been a hairstylist for 5 years, you don't have 1 year tax return, I might still be able to qualify you based on that. Okay, but for the most part, if you've only been a hairstylist for a year, not going to be able to help you. Okay, so I actually usually kind of stop the conversation when it comes to income. When it's someone tells me they're self-employed or they own their own business, I'm like, okay, well, we're going to find out looking at your returns. That's all we need to do, because there's no way I can figure out how much you actually make on the phone. Okay. All right. Credit scores. How much do you pay, and how much do you pay monthly on credit cards, debts, card notes, student loans? Why am I asking these questions? Well, no, obviously, I want to know, number one, what you think your credit score is, and if it makes sense to have your credit pulled, and how much your debts are. Right? If you tell me your credit score is a 400 and you know for a fact it's 400, then there's nothing I can do to help you, right? And I can pull your credit, but it's not going to lead to anything, right? The help that you need is beyond whatever I can provide. Okay. Now, if you tell me you're like a 500, 550, 600, 650, if you're in that neighborhood, then I'm interested in finding out the truth, because your scores, if you didn't get it from another lender, might be from Credit Karma or a third party reporting system, consumer credit reports. Let's get to the truth. Now, Michael's asking me, do I soft pull potentials? No, I don't soft pull potentials. I can do a soft pull supposedly, but no, I like to just know the truth. I want to know right away. And if a client is not willing to do that, then we might not be a good fit. Because I'm like, why are we dancing around? Let's just know. Let's know where you're at, right? It costs me money to do it. It costs you nothing unless you buy a house. Then I might charge you, part of the closing costs. But at this point, it's free to you. You might as well know the truth, right? So I believe it's a benefit to the client to pull their credit, especially if they're in the neighborhood of qualifying. Okay, because that's again, this is about transparency. This is about knowledge. This is about knowing where you're at. There's no way to know where you're at without pulling your credit. So I think it's vital, right? It's literally the first thing you need to do. Okay. And of course, I need to know your debts, right? Which the credit report provides. How much do you pay monthly on credit cards and such, right? It allows me to figure out if you can buy or not. Let's say you're like, well, I got $4,000 in car notes and credit cards, whatever. And I'm like, how much do you make? I was like, well, I make about $5,000. I'm like, well, then you're not buying a house. Right now, you're at 80% DTI, right? We need to be at 40% DTI with the house. So I already know right there. And then you're not ready to buy a house. You need to lower your debts or increase your income. Whatever it is you got to do, you got to get rid of, you got to lower your DTI, right? But, again, I talked about this earlier in terms of credit scores, and you have to understand I actually combined a couple of classes together. But, one of them is the questions that people ask and the questions that I ask, right? So that's why we might have some overlapping information. But, as a credit scores, because I need to know, like, what you think you're working with. And I do it as sort of a test, right? Also, I want to know what your expectations are. If you say I'm a 580 credit score and I got my score from Credit Karma, I need to be prepared to tell you that you might not have a 580 credit score, and therefore you're going to need to do work, right? I had a person apply who said they were 650 credit score, and they got it from Credit Karma. I pulled the credit, it was a 600. And I told them that they had a 600 credit score, and they were pissed at me. They said that I lowered their score by 50 points. I'm like, no, that's not what happened. You actually were misinformed. Your score was not a 650. It's a 650 according to a fake credit reporting system, but your actual score is a 600. Okay, but that really upset them, and it made me think to myself, if I had just told them when they first told me what their scores were, what the current situation is, they wouldn't be mad at me, and we might actually be able to move forward. Right. So if they told me I'm at 650 credit score according to Credit Karma, I might be like, okay, well, listen, that's good that you're at 650. We can start at 580. But I just want to let you know that a consumer credit report is not going to be the same as a mortgage credit report. So your scores might be higher and it might be lower. So I just want to prepare you for that. And I get them to say, okay. And if they say, okay, then when I tell them their real scores, they're not hit so hard with it. They're not caught by surprise. Okay. But anyways, that's the reason why I asked the credit scores. I want to know what they're thinking. Where are they at? So it's more like a sales conversation I'm having. Yes, I do want to know what their credit scores are, but I know the truth. I don't know until I pull their credit. Okay. Again, debt to income ratio. I need to know what their liabilities are on the credit reports, because it affects their buying power, right? I can pretty much, if they know their credit report, or they know how much they pay in credit cards and car notes, they know for a fact. There's no denying it, and they know their income. And it's literally like one-to-one. Like they have $4,000 in debts, and they make $4,000. They're not buying a house. There's no sense in pulling the credit, right? The only time I pull the credit in that situation is if I think they don't know what they're talking about. If I think they're just making stuff up or whatever, right? But I'll tell them that. It's like, I can pull your credit, but I don't think you're qualified because you don't make enough money to buy anything at this point, right? I mean, at this point, you're spending as much as you make, and you don't even have a house yet. So I don't know what you expect to use to buy a house, right? And I'll tell them that. I'll be honest with them. It's like there's no room to purchase anything there. Okay. So the next question is funds prepared to purchase, and I ask them, do they have a 401k or savings? Now, funds prepared for a home purchase. You guys probably ask this question as well as real estate agents. Obviously, if they have nothing, then why are we talking, right? Well, there's down payment assistance. Well, yeah, but you still need something. You still need to be able to pay for an appraisal. You still need to be able to put up earnest money. There's all sorts of other stuff that you need to be able to provide. So if you have nothing or you're working on it, then you're not ready. Why are we having this conversation? Right now, if you're talking to me because you want to know what you need, then that's a fair situation. If you're like, Larry, I don't have anything saved right now, but I want to know where I'm at. I want to know where my scores are at. I need to know what I need in order to buy a $200,000 house. That's fair. Let's move forward because I want to provide the information because I know that if I provide you this information, you'll be better prepared when it is time to buy a house. And hopefully you remember me that I provide you this help and assistance when I know you were not ready to buy yet. Right? That's a fair situation, and I'll take that all day long. But if you're trying to buy a house tomorrow because you're about to, your lease is out and you have nothing, you're not ready to buy a house, and you need to release again for a year. Okay, that's really the truth. Okay, down payment assistance can help, and maybe you get lucky, you can find a seller that's willing to pay for concessions, whatever. But you're going to have to come out of pocket something, right? And there's a chance you won't qualify because even if all these things are paid for, even if down payment assistance is there, even if you have sellers to pay for concessions, the fact that you have $5 in the bank, the underwriter might deny you anyways, even if everything's paid for. So it's not just about having the physical cash to pay for stuff, but it's also about qualification. Are we going to get you into a house and you have nothing to cover for next month's mortgage or whatever? Not next month, but it wouldn't be next month, but the next mortgage payment, I should say. If you don't have that, then it's like we're putting you in a dangerous situation. Okay, and I asked about 401k and savings because a lot of people don't realize that they can actually use a 401k to put it towards down payment and savings for some reason. A lot of people forget that they have that money. So when I ask them how much they have in the bank, they got nothing. I'm like, do you have a savings? Like, oh yeah, I got $6,000 in savings. I'm like, okay, well then that's $6,000 that you have, right? A lot of people forget that. So I asked that question. Okay, and when I'm asking how much you have set aside, I want people to understand that there is, for the most part, a requirement to put down. And people might think, why would I need to put, 3.5% down to borrow 96.5%? It doesn't make sense because they want you to have skin in the game. They want to know that you're willing to put something that's important to you, which is your money, into a house in order to qualify because, 0% down for USDA and VA is a different story. But if you don't have any skin in the game, then you can walk away and it doesn't really affect you, except for it affects your credit scores. So that's why you need to put something down, right? Again, for the VA, that's another conversation, but they deserve the 0% down. And USDA, they're doing that because they want to encourage you to move out into the middle of nowhere. Okay, so there's a reason why that happens, but for the most part, they want skin in the game. Okay, so don't try to come with no skin in the game. Okay, and of course, there's closing costs, which I explained in the earlier class. Okay, ask about student loans. Why am I asking about student loans? Because there's a trend in the last, I would say, year and a half. Student loans have been put into forbearance by the people who provide student loans, which is really bad. Okay, because if they're in forbearance, then it's almost like you're telling a government entity that you can't make your student loan payments. And if you can't make your student loan payments, what makes you think you can make a mortgage payment? Right? So we need to address that right away. So I asked the question not to say that you're going to get denied, but I asked the question because if you're, oh, well, my student loans, yeah, they were put in forbearance. I'm like, okay, well, we need to fix that now, right? You're not going to buy a house next week. That's not going to happen. Okay. We need to fix that now. We need to get that out of forbearance. And once we get out of forbearance, then we can move on, right? It's a hard stop, basically. Okay, so that's why I asked about student loans, and maybe you're paying zero because of income-based repayment, or maybe you're still in school, whatever. That's okay. We can move forward and look at that. But if you tell me you're in forbearance or you're in default, oh man, yeah. So that's why I asked about student loans. It's a trend, right? Again, is it deferred? Is it forbearance? And there's different types of ways that student loans are approached when it comes to structuring your liabilities towards them in terms of DTI, in terms of qualifying, basically. What's on the credit report, as in like how much you're making a payment on your credit report, or is it income driven? Or if there's no payment, are we taking only 1% of the total debt, or we're taking 0.5% of the total debt. It depends on the loan program, right? The 0.5% actually is new for FHA in 2021. Yeah, so that's a new thing, right? So a lot of people didn't qualify back in 2020 with the FHA because of the 1%, but now that they've changed it to 0.5%, people started qualifying. Okay, so it's actually a big deal when I ask about student loans. Now, some people say I don't have a student loan. Okay, then I move on to the next question. Okay, the last question I asked is red flags. Have you been under bankruptcy? Do you have any foreclosures? Do you owe money to the IRS? Do you have any student loans in default? Back child support that we don't know about? Are you being sued by anybody? I ask these questions, and I ask these questions of everybody because I don't want to discriminate. I don't want to sue, right? Even people say they have perfect credit and this and this and that. I still ask them they have red flags because, again, I can't discriminate, right? But I asked you about the red flags because 9 times out of 10, people who do have red flags, they don't tell me about it, right? So, like, 9 times out of 10, whenever I find that they have back child support, they don't tell me that in the beginning. and I ask them, and they still don't tell me, right? So they are literally omitting or lying on the application process, okay? So I ask them for 2 reasons. And one, I'm hoping that if you do have a red flag that you know about, you let me know so that we can at least be prepared mentally. Hey, we're going to have to address that. Oh, you have back child support? Okay, we need to take a look at that. Maybe I should pull your credit. Maybe I should. Maybe I should look at your paperwork first before I pull your credit. Now, if you want to really know, then maybe we should pull your credit. But we need to be prepared for denial because if you owe back child support, you're not going to be able to buy a house. You're not going to get qualified to buy a house, right? So I do it, of course, just to set expectations, but also to know what we're dealing with, right? If you say you've been in bankruptcy or foreclosure, how long ago? If it's 5-10 years ago, okay, maybe not that big of a deal. If it was last week, okay, wait, hold on. Wait a minute. Okay, we need to address this first. We need to talk about this first, right? So that's why I asked about the red flags. Plus, I also asked red flags so that when we get to a later conversation, and I go, how come you didn't tell me about your back child support? You can't be like, well, you never asked me. No, I did ask you. I asked you the first time we talked. I asked you about it, right? So I do that in order to make sure that the client doesn't try to pull fast one on me and blame me for it, right? Because let's be honest here. A lot of times things go ass backwards and the lender is the one that gets blamed, right? And my biggest issue with that is there's no way to prove who released the blame, right? So everyone's mad at each other. Well, if I asked you in the beginning, right, and you didn't tell me, then the blame's on you, right? I asked you, do you have any red flags? You told me no, but you have back child support. So we're delayed because of you, not because of me, but because of you, right? And I might not be as harsh when I say that, but I do make it clear that you can't put this on me. This is not, and I tell the agent, hey, Mr. Agent, I asked the client very specifically, did they have any red flags? And they told me no. And we found out that they have red flags. So because of that, we're going to be delayed 2 weeks. I'm sorry, but not sorry. Blame your client. Don't blame me. Right? And they go, well, you should know your due diligence. Well, we asked them, and they told us no, so we didn't even think about it. Right? You can't blame us if we asked them about something very specific, and they said there's nothing to worry about, and then we don't look for it, and then we find it later on when the underwriter does a search that I can't do as a loan officer. You can't blame me for that because they told me not to worry about it. They told me there was nothing to worry about because I asked them about it, and they didn't tell me about it. Right? And it happens all the time. Like a lot of people, like I'll have to turn down a client that's under contract, and it's because we found something on their background check, whatever. And the agent's like, "Why did you know about this?" Well, number one, we asked them about it, and they said there's nothing on there on the application itself. The 1003, they didn't fill anything out about it. So it took a deep search that the underwriter has access to, not me. And the underwriter found it because that's the underwriter's job is to basically play detective. I don't have access to those tools, so it's not my fault. It's actually the client's fault for not disclosing it in the beginning because we are a disclosure business, right? And I'll talk about that later on in this class, okay? But yeah, when it comes to red flags, if you have questions about that, it's better let's just talk. Let's just talk about it. Let's not try to figure out do you qualify or not. I want to know exactly how far, how deep these red flags may be, okay? So that's my answer to that question, okay? All right, so we're at the last class, and this one should be a little bit quicker. And I'm sorry that this is already an hour and 20 minutes in. I was trying to make it, maybe I can still end it an hour 30. We'll see, because I do want to answer questions as well. So top 5 things not to do when buying a home, and it's not what you think. Now, before I do that, does anyone have any questions or whatever? It looks like Michael I just created a resource explain money need in the anticipation of cash close because I've seen so many people get surprised at the way I saw down payment and closing costs. Yes, Michael. And if you notice in my presentation, I actually listed a bunch of stuff that needs to be paid. Of course, there's no price tag around it, but it's just I want people to know what they need to pay. But I also have a PDF version of that, and I do. I mean, I'm interested in looking at what you have, but I do plan to have in the future a class and probably a presentation, meaning like a PDF of the estimated fees that you should expect to pay whenever you buy a house. That way, like you said, I don't want people to get surprised. I want people to be prepared. I want people to show up and be like, okay, I have enough for a down payment and I have enough to cover all this closing costs, and I'm good to go. Right? That's really what the point of our classes are. That's really what the point of what I'm trying to do is. I'm not going to say I'm tired of people showing up and not being prepared because obviously they don't know. But I think that we can fix that. I think that as a community in real estate and mortgages and through our efforts, we can teach people what they should have learned in school, right? We could teach people what they should have been passed down by their parents or whatever, right? We can teach them that. And that way, there's a lot less wasted time, energy, people's credit getting pulled unnecessarily. We can avoid a lot of the heartaches, the drama. We can avoid the rushing, right? I mean, I really hate it whenever I get rushed to close on a contract when the client doesn't know what the hell they're doing and they provide like shitty photos of their documents and they're missing pages and they're blaming us for not closing. It's like, no, the client obviously is not ready for this process and they're not willing to do the work to complete this process, okay, which I'm going to address. All right, so no questions. All right, so top 5 things not to do when buying a home and it's not what you think. Number 1, do not lie on your application or to your loan officer. We will find out, okay? And I talk about mortgage fraud, and that's kind of a joke. I mean, it's not really mortgage fraud. I guess it kind of is sort of. Mortgage fraud is more like you faking documents, right? But mortgage fraud can also mean purposely omitting information. Right. Let's say you own a property and you tried to hide it. You didn't want me to know about it. Right. So in the 1003 asks you, do you own other properties or are you party to other properties, whatever? And if you put no, but we find out that it's yes, that's a red flag. Right. Like, why did you tell us you don't own a property when we found out that you do based on a title search or whatever? Right. So just don't lie to us. And yes, you can probably get away with, not knowing by answering the question incorrectly, but just be prepared to address it if we find out. What I mean by that is if you answer something on the application knowingly, or maybe not knowingly, incorrectly, and we find out later, don't act like we've screwed you over. You didn't give us a full application. You didn't give us the full truth of your current situation, right? So just avoid doing that, okay? It's really bad when it happens. And it's happened more than not in the last year or so. Okay. Number 2, do not blame your lender if your credit scores are lower than what you thought. Credit karma is fake. I've already talked about this, and I can't harp on it enough because it is literally becoming a regular thing, right? And what I mean by that is I don't blame people for wanting to be prepared. I don't blame people for going online and trying to get information, yada 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 yada. I don't blame people for that, right? I'm encouraging that, right? But don't get mad when I tell you, listen, I'm glad that you did research and I'm glad you have your credit scores and everything like that. But I want you to know that that's not the credit score that we use. The credit score we use is the credit score that I will pull when I get your application, and it's an inquiry. Hard or soft doesn't matter. It's an inquiry, right? Because people call it a soft pull, hard pull. There's no real such thing. Right? An inquiry is an inquiry, right? A soft pull might as well be called a no pull because it's not an actual inquiry, right? It's not a pull. There's no pull there, right? A consumer credit report is totally different from an inquiry because what I'm doing is I am representing a mortgage business, talking to the bureaus about so-and-so's information. Hey, I want to know what is going on with your credit scores, right? And I'm going to talk to Experian, TransUnion, Equifax about your credit scores, right? And if you have scores, it's not going to be the same as what the bureaus have, right? So when I ask the bureaus, they're going to be like, okay, you are asking about John's credit report. So you're inquiring. So we need to ding John for his credit pull, and we need to charge you for the credit information we're providing you. So that's why it's an inquiry. When you do a soft pull, there's no inquiring. You're not inquiring anybody. No one knows that you're doing that, right? No one, like, you're not talking to the guys at TransUnion Equifax Experian about getting your credit scores. You're getting whatever it is that this third party is providing you, right? But it's not an inquiry. That's why it's considered a soft pull, I guess. But the way I look at it is not, there's no hard or soft pull. There's an inquiry and a non-inquiry. What you're doing is a non-inquiry, which non-inquiry leads to non-truthful or non-factual or non-complete information. An inquiry gives you full information, because the inquiry is what Fannie and Freddie needs. They need the inquiry in order to qualify you. Okay, so the bottom line is you don't have an inquiry. Whatever you have is it's not what I have or what I need. Okay, so your expectations need to be correct whenever you talk to a lender, because if you get upset because of it, or your dreams of getting a conventional loan is turned down and you have to go FHA, you're just not informed. Okay, you never qualified for a conventional, or you never qualified for a mortgage, right? You were faked into thinking that, and that's why I wish these credit karmas and stuff like that would actually tell you, disclaimer: this score is not what lenders use to qualify you. In fact, there's and I did a whole video about it. You can go online and there's like documentation from the officials who run the credit reporting or credit pull, whatever environment, whatever, who actually say line by line, a consumer cannot depend on a consumer paid credit report to determine what a actual lender will actually say when they look at your credit, or what they'll actually see when they look at your credit. Okay, it literally says that in the report, right? So I wish this was on every single page that tells you what your credit score is. This is not being used by your mortgage lender to qualify you. This is just information that we came up on our own. That's really what they should say. Okay. All right, number 3. Do not do anything major to your current financial situation. No exceptions. And I said this really should be common sense. But how many idiots do it all the time? They go out and they go buy a new car, or they go buy furniture, or they see this really nice looking microwave that's like super discounted. They buy today or whatever. No, and changing jobs. Even if it's a promotion, or I'm going to this job because I'm making more money, whatever. This is the thing. When we pre-approved you based on the current situation that you're at. That means your income, your credit situation, meaning your whatever your debts are and your scores, and your current funds. If you change any of that, then you're literally throwing your pre-approval out the window and starting the process over. And in a lot of cases, you're starting it over so that it screws you over. All right, Tammy, no problem. Thank you so much for being here. And again, I will give you a replay so you can see the rest of it if you're missing whatever else is here. Okay. So basically, you need to like freeze your situation. When you're pre-approved, you need to stop and act like nothing is going to change until you get the keys to your house. Okay. So when people call and ask me, I'm glad they do. Hey, Larry, we got this offer to get a discount on this and this and that, but we have to find. No, don't do it. Just get the freaking house first. Get the freaking house, because let's put it this way. Yeah, you might be okay. You might be fine. You might get off scot-free, whatever. But you're going to have to do more work to justify or fix or source or explain why you did that. What is this? Why did you do this? What is this for? Right? And it's going to create more work. And I mean, I'm not saying the underwriter is going to do this, but from my perspective, if you're willing to risk qualifying for a house by making a trivial decision, it makes you a risky person. It makes you seem like a person that doesn't know how to make smart financial decisions. Okay, and that right there makes people who want to give you money to buy a house skittish. Like, we're trying to make sure you make smart financial decisions. If you can't even be patient enough to not make a major purchase before you get the house, it shows that you are a risk taker. It shows that you make stupid financial decisions. So in general, we're already like, wait a minute, hold on. Why did you go and try to buy a car when we told you not to, especially since it can affect your qualification? You're looking like a bad candidate for a mortgage. Okay, so yeah, you might get away with it, you might be able to afford it, whatever, but it's already making us think to us, is making us think that you're just crazy. Okay, and again, the underwriter might not make a decision based on that, but that's how I feel. Whenever someone tells me I just bought a new car, I'm like, dude, why you put me through this? Why am I your lender? I wish you could do this to someone else because I don't have time for this bullshit. Right? That's really how I'm thinking whenever someone makes a bad financial decision while they're trying to buy a house. Okay, so like I said, do not do anything major to your current financial situation. No exceptions. And I actually even get deeper into that. Pay your bills, pay your credit cards, pay your mortgage. Okay, I've had people who were at 700 credit scores, 780 credit scores, well qualified with a low interest rate, decide not to make their credit card payments because they're like, well, they already have my credit, so they already know what I qualify, so I'm not going to make these payments. I don't know what it just it blew my mind because obviously they were responsible financially because they made their credit payments constantly and they were able to achieve a high score, but for whatever reason they threw that shit out the window because they already had their credit pulled. And it's like, oh, I don't need to make my $50 payment or $25 payment because Larry has my credit. No, we're gonna find out. We're gonna know, right? And the worst thing is if it makes it so that you don't qualify anymore because your credit scores are dropped, right? And this has happened to me. I'm very sad about it, right? Where I had clients who were 700 plus credit scores. They were ready to buy a house. They already moved into the house. They were renting at the time, and then they didn't make their credit card payments. And we did another pull, and their credit scores dropped, and they were no longer approved. It was a mess, right? And they had to get out of the house and whatever. So again, when people ask me, do I need to make my mortgage payment? This is usually when we're doing refinances, but it can also apply to people trying to move from one house to another. They ask me, do I need to make my mortgage payment even though I'm closing the next day? Yes, make your mortgage payment. I know that you're trying to save as much money as possible. I know you're thinking to yourself, okay, well, because I'm about to close the next day, I don't need to make my mortgage payment. No, you do not want to risk anything. What if you don't make the mortgage payment and something goes wrong and you can't buy the house for another 2 weeks? Well, now you're 2 weeks behind on your mortgage payment, and we didn't close to pay the house off, or whatever. So you never know. So make your payments. If one mortgage payment is going to make or break your deal, you don't qualify for a mortgage. You shouldn't be buying a house. If one mortgage payment or one rental payment, whatever, one payment, if that one payment is going to make or break your deal, you shouldn't be buying a house. Okay. All right. Number 4, and this is one I think every loan officer wants to say, but they're too afraid to say it. Do not feel entitled to be approved without putting out effort. Nobody owes you a mortgage. Now, I gotta be careful with that because obviously everyone should qualify. Everyone who qualifies for a mortgage should get a mortgage. There's no discrimination, yada yada yada, whatever. What I mean by that is I don't need to give you $200,000, especially if you're not willing to do the work that's required for me to give you $200,000. Okay, you have to understand. People who will never meet you, they don't know what you look like. You don't know what they look like. Well, actually, they might know what you look like because they look at your driver's license, but you don't know what they look like. Okay, people who you don't know what they look like. They'll never talk to you. They'll never interact with you. Are about to sign over $200,000, $300,000, $400,000 to you to buy a house, right? Off of 2 years worth of information. Okay, the least that you can do is provide the documents and do what is asked in order for them to feel good about giving you the money, right? Like I really, really, is one of my biggest pet peeves. Whenever someone sends documents and the documents are just bad quality, they're cut off, their photos, whatever, and they complain about me asking for a better version. That really pisses me off because you have to understand, number one, the law does not allow us to accept redacted documents. Redacted meaning something's missing. It can be a corner of a page missing. It's considered redacted. Redacted means changed, right? They do not accept redacted documents, number one. And number two, you did a shitty job. Like if you look at the photo, it needs to look like a photocopy of the actual document. If it doesn't look like a photocopy of the actual document, then it's lower quality, and you should not be surprised if he asks you for a better version, right? You have to understand, the underwriter, their job is to basically endorse your loan. Their job is to put their name on your loan so that it can be sold to the secondary market, it can be sold to an investor, whatever, right? And these investors have guidelines, they have expectations, they have rules, they have, things that they expect from a packaged loan. And if they look at the document and they're not happy about the document, they're not going to buy the loan. The loan is now attached to the underwriter. It's under the underwriter's head right now. The loan that the underwriter was trying to sell to the investor is not being bought. So now the underwriter's stuck with that loan, and it's going to be inside. It depends on your structure, whatever. But it can tie up funds to do more loans, right? Because in my situation, when I say my situation, I'm talking about with Bennett Mortgage, we actually fund the loan, meaning we buy the house, and then we sell the loan to the secondary market, and we get our money back. And then we can do that. Then we can repeat the process. But if a loan doesn't get sold, then that money is jammed up. That money that we spent or we paid to buy the mortgage is now stuck with us, and we're not able to recoup that money, and therefore it lowers our ability to lend out money, right? So it's important that the underwriter gets loans that are sellable, and a part of a loan being sellable is the fact that the documents are clean or the documents are complete, right? So when someone gives me shit for me asking for a better version of the documents, you're getting a $200,000, $300,000, $400,000 loan to buy you a house from someone that doesn't owe you anything. You can do a better job of providing better documents. Okay. So again, don't be entitled to be approved without putting out effort. Okay. And let's just put it this way: I can delay your mortgage not because I do it on purpose, but I can be like, you know what? I'm going to keep on asking you until you send it to me. If you don't want to send it to me, then my hands are tied. And if we get delayed on your mortgage, it's your fault, because I'm telling you what needs to happen for us to move to the next step. Okay. Something that my coach told me one time: I will meet you at the 50-yard line, but I won't go past it. I will meet you at the 50-yard line, but I won't go past it. It makes a lot of sense to me. I will meet you where you need to be met in order to make things happen, but I will not go beyond that, especially if you're being entitled. Okay. So that's all I need you to do is meet me at the 50-yard line. Meaning, don't be entitled. Do what's asked so that we can get you closed. Okay. Number 5, do not under any circumstances start the mortgage process if you're not physically, mentally, or emotionally ready. And what I mean by that is if you're going to cry, if you're going to bitch, if you're going to complain, if you're high stressed, you're not ready for a mortgage process. Now, I understand there's certain situations, certain exceptions where you have to get into a mortgage because you're getting divorced or whatever, right? I understand that. And you have no choice, right? You have no choice but to enter the mortgage process, even though you're not emotionally 100%. But I highly recommend that if you're going to buy a house, to be emotionally ready for it, right? Like, being sad or upset or crazy or stressed, whatever, does not help the mortgage process at all. It doesn't speed the mortgage process faster. Just because you call me and yell at me doesn't mean that I'm going to work faster, right? Or anyone for that matter is going to work faster. Okay, so you need to be emotionally ready. Mentally, when I say mentally, I'm talking about being prepared. Like this, the information we're providing. Don't come to the mortgage process and not have your tax returns ready. That doesn't make any sense, right? You're self-employed, and I haven't done my tax for the last 5 years. Okay, well then how do you expect us to qualify you? While I'm working on it, I say, well, don't go make offer. I'm not giving you a letter because you're not mentally ready. You're not prepared, right? And when I say physically ready, I'm talking about when I say physically, I'm talking about time. I'm talking about the time that it takes to do this process. I'm talking about the time to move, right? If you are trying to buy a house because you're about to get evicted or whatever in 30 days, you're not physically ready. 30 days, there's so much opportunity for things to go wrong in that situation. Okay. Like, and I'm going to use myself as an example. The way I move is I always make sure I stay in the house, or I'm still able to stay in the house a month after I'm moving out. So like the last time I moved, I actually was renting a house, right? I paid an extra month of rent after I closed. on the new house. So I give myself a month to take care of whatever shit I need to take care of. So I can move stuff. So I can move stuff over. I didn't turn off my electricity the day of closing. You see what I'm saying? Because it's happened to clients all the time, not to just my clients, but I hear it all the time, where clients turn off the electricity, turn off the water the day they're closing, and closing delayed a day, and now they're stuck at home with no electricity, no water. I've heard of it, right? And I'm not saying that that's, I'm not saying that we want to do that. I'm not saying that that's normal, but I'm saying it's a possibility that you might not be able to move into your house right away. So like I hear this all the time, and I feel for people whenever they say I cannot be late. I already have movers coming in. The houses, the movers already packed all my stuff. My stuff is inside of a truck. I have nothing. Okay, you're not physically ready. You see what I'm saying? You need to be in a situation where you can't be hinged on a day, 1 or 2 or 3. Now a month, a week, okay, that might be understanding. But if a day makes a huge difference in your life, you're not physically ready to buy a house. Okay, you're not emotionally ready to buy a house. Okay, you need to set yourself up so that it's a smooth, clean, emotionless, and stress-free situation, and it can be. I've closed many loans this way. I know many people close loans this way. You can make that happen, but you have to be prepared. If you're not prepared, you're going to put yourself in a high-stressed, super urgent, everything looks like it's going wrong situation, and that's not the way to do a mortgage process, especially since it involves so many different people. Okay, and there's nothing worse than waiting for people to do their job when you're in a screwed situation. So don't put yourself in that situation. Put yourself in a situation where you're in a winning situation. Put yourself in a situation where it's smooth, and it's clean, it's stress-free, it's easy, and you just show up whenever you need to close on the loan, right? And I'm giving you this information, and 9 times out of 10 it's not going to happen. 9 times out of 10 people are in a, they're trying to do everything perfectly, whatever. That's okay. Okay, but I'm trying to do this because I'm telling you there's a way of doing that. And if you can do it that way, the mortgage process is going to be a whole lot more enjoyable, a lot easier, and you're going to be a lot happier. And everyone else will be happy too. Okay, but it seems like most people aren't that way. Most people are already trying to buy a house and they're not even applied for a mortgage yet. That's really where people are at. They're trying to buy a house. They're trying to make offers. They haven't even applied for a mortgage yet. And they already have their electricity, a month ahead scheduled to be turned off. If you're that worried about paying an extra day of electricity and water, you might not want to buy a house because you're going to run into a whole lot more expenses than simply 1 day of electricity. Okay, I think that's all I got. Oh, the bonus. Do I still have you guys here? There's 10 of you guys here. Wow, I'm sorry that you guys are sitting here like hear me kind of rant. But the bonus question or bonus thing is: do not go under contract that is not subject to buyer obtaining buyer approval. Appraisal waivers and no inspection is questionable. Again, I'm going to repeat that. Do not go under contract that is not subject to buyer obtaining buyer approval. And appraisal waivers and no inspection is questionable. That is between you and your real estate agents. I would not tell you what you should do, but I'm going to tell you that from my perspective as a lender, it's crazy. Doing appraisal waivers is crazy. Buying a house with no inspection is crazy. Okay? I mean, that's like buying a used car with no Carfax. You don't know anything about the car. You don't know about the mileage. It's crazy without driving it. That's basically what you're buying a house. Well, actually, it might be worse. I don't know. But you need to at least know if the house is in good condition, right? So I think that's crazy. But again, that's between you and your real estate agent. Okay? But as a lender, I'm telling you, buying a house that's not subject to buyer obtaining buyer approval is it's stupid. It's insanely crazy because anything can happen. What I mean by that is, let's say you have a 30-day contract, and for whatever reason we need a document from the government, and it takes 14 days to do that, right? 14 days, right? And we find this out with only 10 days left for closing. So 4 days with a delay. Under contract, that seller can be like, you know what? I don't want to wait 4 days. I'm going to go ahead and just take the earnest money. They're allowed to do that, right? And that's putting yourself at major risk, especially if you're putting like 1% towards earnest. So let's say it's a $400,000 house, you put $40,000. You're basically gambling $40,000 that you're gonna close. But if you don't put that as subject to buyer obtaining approval, right, and you don't get approved, they're like, I don't care. It's not subject to buyer approval. So because of that, I'm allowed to take your earnest. I'm allowed to, execute the contract, which means the contract says that we're supposed to close this day. We didn't close because we're 4 days delayed. So I'm gonna go ahead and just end the contract. We're not gonna, because it's no longer valid, and I'm gonna take your $40,000. That's a possibility, right? And that's a situation you don't want to put yourself into. Okay. I'm adding a person who asked a question, and I'm gonna read it once I finish this part. But I think that it is foolish to gamble. Like, I don't think any house is worth gambling 1% of the value, right? And you can talk to the best loan officers in the world. You can talk to whatever. They're always going to tell you normally that they would never guarantee that you're going to be approved. They will never guarantee it. Now, there's some situation where they might actually put money on it. Well, yeah, you'll close on time, put $5,000, but normally that's because they did a TBD, to be determined, pre-approval. What I mean by that is they actually already underwritten you, right? Which I can do. Okay. What I mean by that is they took an applicant and they underwrote them as far as they could, as if they had a contract. And they got to the point where it's TBD, to be determined, on the property in the appraisal. So basically, the underwriting process is done except for the property part, right? And they know that the person is approved. Now, of course, things would have to stay the same until you actually sign on the dotted line, but that is closer to a guarantee than you can get anywhere else. But if you're not TBD'd, if you're not fully underwritten, anything can happen, right? You're trying to qualify with overtime, and your job decides that they're not going to give overtime anymore for the rest of 2022. Well, then you're screwed, right? Your income is no longer what you thought it was, and you no longer qualify. But because the contract is not subject to buyer approval, you say, hey, you know what? I'm going to go ahead and renege on the contract because I don't qualify anymore. They're like, okay, well, we get to keep your $40,000 because it's not subject to buyer approval, and you're reneging on the contract. So you can lose that earnest money on day one. So I understand the market's insane, and I know a lot of real estate agents are coaching you to do this. I've seen them, right? But I think it's too much of a gamble. And it's too stressful. And if you're that desperate to buy a house, then good luck. Michael Hotman, do you mean buyer being approved for a loan? Yes, that's what I mean, right? Like there's a third-party addendum, and then maybe this is a Texas thing, I don't know, right? But there's a third-party addendum where it says, this contract is subject to buyer receiving approval for the loan. There is, okay, you're saying it's built in the purchase agreement here? Okay, that's good. Well, in Texas, you can actually X the box that says not subject to buyer obtaining approval. You actually select that. And I guess that's the strategy for negotiation purposes. I think it's crazy, right? I think it's crazy, but I've seen it. And I'm telling you, and maybe I'm not very popular amongst some real estate agents by saying this, but I'm telling you that if your real estate agent asks you to do that, they're asking you to gamble. They ask you to basically say, you know what, a lot of people get denied in the middle of the purchasing process, but that probably won't happen to you. Even though I'm not a lender, I'm not qualified to tell you that. But you'll probably be fine. So go ahead and put the $40,000. Go ahead and put 1% of your hard-earned money, of the 1% of the property on the contract, knowing that if you get denied, you lose it. Go ahead and do that. Good luck. That's all I gotta say, right? All right. So Maria asks, I have an investment property that I PIF. I want to get a home equity line of credit, but is it considered investment and not residential? What options do I have? So I don't do very many HELOCs. That's what home equity line of credit is, a HELOC. I don't do very many HELOCs. But there should be options out there. My company does do HELOCs. I just don't do very many of them. I can talk to you about those options. but there's probably plenty of options out there. Usually with the local bank, they can probably figure something out for you. But if you want with like a traditional lender like myself, I can explore those options for you. But there are options out there. I don't think it matters if it's investment or residential. It's just a matter if it's a commercial or is it a residential property. Is it commercial as in like, is it like a storefront or is it an actual home? If it's a home, you should be fine. All right. So next question here. Actually, no other questions. I don't think. And this thing's in the way here. Let me see. All right, cool. So no other questions here. Let me see if there's any questions on the Zoom. Doesn't look like it. All right. And that's basically it for my presentation. Do you guys have any? This Q&A time. So I really don't have a stop time. So if you have a question, I'm here to answer them for you, and then I'm going to keep on answering them until everyone leaves. I will say a quick summary, I guess, of my classes. The point of the first class is, again, to address the question that people ask. The reason why I call it honest answers is because I think a lot of the questions are stupid. And, they say there's no stupid question. I really think they're stupid. Like, how do I qualify for a mortgage? Well, you talk to a lender. That should be pretty common sense, right? How do I know how much I can afford? Well, you can talk to a lender, right? How do I know how much I can afford? How much I make offers on? Get pre-approved. That's how you know, right? You're asking me to magically come up with a number in my head based on just talking to you online or talking to you on email or on a phone call. It's not going to happen. I need to get an application, right? Like the whole, what's the best interest rate? What's the interest rate right now? 3%, 2.5%. I don't know, right? I can't really quote you because I don't know what your situation is, right? I've seen as low as 2. Is that what you want to hear? I've seen as high as 5. Is that what you want to hear? I don't know how to answer that question, right? Because I don't have enough information, right? How to get the best interest rate? I think that's a legit question though. How to get the best interest rate? That's a legitimate question, and I don't think it's stupid. I think it's a fair question, and hopefully I did my best to answer it, right? Maria asks, what other options other than a HELOC? It is a residential property. So HELOC to me tells me that you're looking to purchase. Not purchase. You're looking to get cash, right? You want some sort of funds, and you're drawing it from the equity of your home. That's what it's telling me, right? It's telling me that you're trying to have liquid, and you're using your home as collateral or like the source of that liquid. So if that's the case, there's cash out refinances. A cash out refinance basically looks at your home value and tells you how much they're able to provide you in terms of equity with certain stipulations in terms of like loan to value and such. And it also considers how much you owe, right? You don't have to pay the current mortgage off. See, a lot of people don't realize a refinance is really just repurchasing your house. That's really what it is when it comes down to it, okay? Like if I was to refinance my house, let's say I have a 30-year and I refinance it to a 15-year, right? What I'm really doing is I'm really just rebuying my house. But instead of rebuying from a 30-year with a 30-year mortgage, I'm rebuying it with a 15-year mortgage. So of course a higher mortgage payment, but I have equity, right? And the equity is mine, so I'm using it as sort of a down payment, right? So it's really a whole new loan, okay? So I have to pay off the old loan first. So of course the old loan they need to get paid first. So let's call it mortgage A and mortgage B, right? Mortgage A needs to be paid off before mortgage B can exist. So you, whatever equity you have, you got to pay mortgage A off, and then the rest of it you get to keep, however you want it. Right? That's what a refinance ultimately is. Okay, cash out is the same thing, but now you're getting cash back from the house, right? Um, yes, so yeah, cash out refinance is an option, and I don't know if you've spoken to a lender before, Maria. I don't know if you've worked with someone in that capacity, but that's a pretty typical product. It's a pretty typical service that lenders would provide you. Um, but yeah, that's another option is the cash out refinance. Now you can also do reverse mortgages. Again, another product I'm not super versed on, but reverse mortgages, they are uh, set up to give you basically money on a monthly basis. But really, what you're doing is you're basically selling your house. You're giving your house up, right? So a reverse mortgage is kind of like I'm going to sell my house back to the bank or selling to the bank, right? And the bank's going to give me my payments that they owe me for the house in the monthly payment type of situation, right? So that's why it's called a reverse mortgage. It's a little bit different. I'm not well versed on it, but it's a way to get monthly income, not really liquid, but monthly income paid back to you. But basically, you're just kind of diluting or dissolving the equity that you've already accumulated. That's why, for the most part, it's for people who are older, who have the house paid off, yada, 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 right? So hopefully that makes sense. But yeah, a cash out refinance is probably the best way. HELOCs are great. Um, Usually they have a higher rate because it is like a line of credit. Usually they're a higher rate than a cash out. But the great thing about a HELOC is you can always reuse it. So you get your money to do whatever you want with it, and you spend it, but then you pay it back. You can reuse it again. That's kind of a cool thing, right? With the cash out, that's just cash that you took out, and you're paying it back based on your mortgage. And of course, you can always pay more towards the principal on your mortgage payments to quote quote uh, pay off your mortgage faster, but it's not like a reusable fund. Once you spend it, it's spent, right? Whereas a HELOC, you can constantly use it over and over like a credit card. Right? So that's why HELOCs are cool. But again, it's a higher rate, right? What are the rates? Again, don't ask me that question. We have to find out. All right. So any other questions? I still see that a few participants here. Oh, Shelly, you was on the call. I forgot to put you allowed to talk. Sorry about that, Shelly. You have any questions? I'm hoping everybody hears me. I don't know. It's a 2-hour call, but I did try to be ambitious and literally clump 3 classes together, and I also allowed for a few questions. When I did my videos, so these classes are sort of a live version of my videos. They were a lot quicker. My video, I think I did like in 12 minutes, and like the top 10 questions or 10 honest answers to top 10 questions. I did that in like 12 minutes. Of course, it was edited. In my first time homebuyer class, where I asked the questions or I say what questions the loan owners asked, I think I took maybe 20 minutes to do that class, even with interruptions. But this class 2 hours, so I don't even know. Time goes by fast, I guess. No problem, Ria. If you have any questions, let me know. I think my information should be in my channel. I think if you found me on my YouTube channel, yeah, my information should be in my channel. Let me see here. Yeah. So if not, then just Google me, Larry Lee. I'm in Frisco, Texas, or Dallas, Texas. You should be able to find my information there. I appreciate Boss Lady. Thank you. I think that's it. There's no one else asking questions in the panelists. Well, actually, you know what? There is. Crap. Michael is talking about the purchase agreement with the buyer being approved for loan. He says it built in the purchase agreement, and the real says it depends. I don't know if he's talking about that. If he is, then I wouldn't know what it depends on. Joyce says very good and great information. Thank you, Joyce. I appreciate it. Michael says audio is still working. That's good. yeah, I spent like 4 hours yesterday and like a couple hours the day before trying to figure out the audio. I'm doing stream and I'm doing Zoom at the same time, and yeah, I was pretty ambitious about it. Shelly asked, "Will you send a copy of us to share with our clients? I wouldn't mind even posting it on my business page. I will. I will share the slides with everybody who wants it. Actually, I'll just email it to you guys because I think I have like a mass email list. I'll share the slides to everybody. I don't mind if you share it. And the replay is going to be everywhere, but I also share a link to the replay as well. I think I streamed it to like YouTube and Facebook and LinkedIn. Yeah, you can share it to anybody. I don't care. Um, and yeah, if you have any questions, or if they have questions, I'll be glad to answer them. But yeah, please, I mean, I would be honored if you share my information with everyone. I really appreciate Brad. Brad's a great info. Shirley's a great info. All right, so it's 2 o'clock. Let's call this a 2-hour call, and we'll end it. And hopefully, my next call is a little bit faster, more efficient. As you can see, it's not 100% polished. I still had a few typos, and I want to make it a smoother transition. Maybe I can condense the first two classes together. Um, and hopefully I gave as honest and transparent information as possible. Hopefully you got what you were hoping to get on this call, and of course, most of all, hopefully you learned something. Either way, I really appreciate you guys being here. This is Larry, the Mortgage Guy, your mortgage insider and certified veteran mortgage advisor. I really appreciate it. I'm out. Ending broadcast on StreamYard.